Hi, everybody. I'm Jeff Morgenthaler.
And I'm Terry Combs. We're with Equipment Zone.
We're here today to talk about leasing, and we're very fortunate to have one of our favorite finance guys in the industry. Let me rephrase that. Our favorite finance guy in the industry, Chris Frame. Chris is from ACG. How you doing, Chris?
Good, Jeff. How are you?
We're doing great. Thanks for being here. We're very happy to be able to do this. And Terry and I were talking the other day about the acronym ACG and what that stands for. Terry, what did you say?
I said I think it stands for All Credit Good.
Yeah. Is that the case, Chris?
I would be a multi-millionaire.
Good answer. Good answer. Hey, Chris, we've been working with you for a very long time at Equipment Zone, long before I was here. Is that correct? About how long?
Yeah, I'd say over 20 years. I think we've worked with Equipment Zone.
That's
Very
fantastic. Cool. We've done a lot of business together. We certainly appreciate all of the hard work that you and your team at ACG do to help finance our clients and get them into these printer packages. So thank you for that.
My pleasure.
Well, I was just going to say, Chris, we get a lot of questions about leases and a lot of repeat questions about leases. So we thought today we'd bring you on and kind of pose those questions to you so that we can get the answers directly from a lender, and then we're going to have this on our website for people to come and be able to consult with when they have their questions about leases. So let's start here. What are the benefits to leasing equipment?
There's several. We've actually done leases with Erebus Brothers, which is a Disney company. We've done leases with, or a lease with Pepsi-Cola, Valvoline. I've quoted Walmart before. And the general reason that even these companies, the big companies, which they can get it cheaper at their bank, but they're typically doing it because they're able to expense off that monthly payment as a rental contract. For a lot of small businesses, besides that rental contract write-off savings is or are they conserve their cash. So for inventory, things like that. Obviously, in this uncertain time that we're in right now with COVID, we're seeing a lot of busyness just because of that. And then it also conserves your bank lines. So you can use your bank lines for other things. But tax benefits, conserve your cash, conserve your bank lines. The other thing is that a lease compared to a bank, you don't have to put your house as collateral, where most banks typically will just do a personal loan and they'll tie the house into collateral if God forbid you were to default. So with a lease, the worst case scenario, would be a collection on your credit report. That would be it. That we wouldn't be able to take your house, and obviously we'd repossess the equipment. I don't mean to be negative, but I'm just trying to show the difference between a bank loan and a lease in that state. Sure. In that regard.
Yeah, Chris, I think something else that I mentioned to people also when that comes up, when they ask me that question, is I will tell them, we get an equipment lease done and funded in a matter of days. Whereas if you're working with your bank, you're lucky to get that done in a month, if you do at all. I mean, some people just get so frustrated trying to work with the bank, they just give up. I mean,
that's right.
Yeah.
Yeah, and with banks right now having to make appointments with your bank, banks are mainly closed, again, without an appointment only. So it makes it a lot tougher for the consumer right now just to go into their bank on a whim to go ahead and present a loan situation.
Yeah, perfect. So, when I talk to clients also, especially ones that are brand new to the industry or brand new to setting up a business or borrowing money, and I mention an equipment lease, they get confused a little bit because some people are only familiar with leasing when it comes to leasing a car. What's the difference between a commercial lease and an equipment lease?
Well, we offer it, first of all, at ACG, what we are as a direct funding source, as well as a broker. So so we do deals internally as well as externally. So number one, and the difference between a car lease and an equipment lease is the buyout. As you know, with most car leases, it's a 40 to 60% balloon payment. With our contracts, um, the customer just owns it outright. Um, and again, being a commercial contract, um, that also makes them able to establish credit for their business as well, because it does get reported to the business credit bureaus.
Oh, that's good.
Gotcha.
Well, so you mentioned the balloon payment. So we hear a lot about balloon payments at the end of a lease or fair market value, all that. Talk to us a little bit about that.
Sure. There's two types of leases, or really three, that a leasing company can offer, and we've most of our customers, and when I say most, 99% plus, um, want to just own it outright at the end of the term. There are, but there is a lease that lowers the payment a little bit if you do a 10% balloon payment. So if the transaction is $20,000, and let's just say the payment is 500 a month. I'm just throwing out an odd number. With a 10% balloon payment, we set it up as $1 buyout lease, and instead of the payment being 500, it's going to be around 515, 520 a month, and that covers that balloon payment, and they just own it outright at the end of the term. But yeah, a lease I do not recommend ever getting into is what's called a fair market value buyout lease, because the leasing company can literally determine that equipment is worth, after whether it's a 3-year term, 4 or 5-year term, they could come back and say that the equipment is still worth, let's say, 40 or 50% of the value, and you've got to come up with a good chunk of change. So if you are going to do a lease, my recommendation is to do $1 or at least a 10% buyout. And again, ACG, over 99% of our customers just want to own it outright, and
So
they
they're
don't want
making
to
that
have.
equal payment all the way through. They make that last payment, good to go.
That's right. At the
Awesome.
50 or 60th payment, they're done, or 59th payment, because we normally collect, a leasing company normally collects first payment or first and last payment in advance. There is a filing fee for the state and the county on transactions under 20,000. It's generally $249. If it's over 20,000, it's $295. But that's right. You just own it outright. Again, is what our customers want.
Right.
All right, perfect. So let's talk real quick here, Chris, about how our clients would qualify. What
Sure.
are the things that they need to have in order to qualify? It's not all about the credit score, but that's a big part of it, right?
That's right. When you are on ACG is one of the few companies out there that does new businesses, and as you know, Jeff and Terry, we do a lot of new businesses, and most lenders won't touch new businesses because unfortunately there's a high failure rate in the United States for new businesses. That's why a lot of lenders, banks don't want to touch them. We do, and the criteria generally is, and again, this is just in general, the criteria in general is we prefer a 700 or above credit score for a startup or individual. We consider an individual also a startup. Homeowner or have a mortgage. We love to see outside income. If you're working another job, or if you are on some sort of a, Social Security or disability, or a veteran or a pension or whatever, we love that. We find, the people who are having income coming in, because typically when you start a business, it's typically a little slow at first. So we found a recipe for success is outside income. And then lastly, bank statements. We want to verify over the last few months that you've got sufficient monies behind you, again, to support you. So, we've also made exceptions before where you don't have to have you could be a 680, 685 credit score, because you've got a very good income, and or you've got a lot of money in the bank backing you up. For an existing business that's over Now, an apparel business, for an existing apparel business that's over 2 years old in business, the credit criteria is even more liberal, just because you've made it to 2 years in business, so you're establishing clientele, you've got a good base of business going on, so so the credit scores can be lower on an existing business. Now, obviously, there's a point, you know, you know, and in today's COVID world, I would say generally, if it's an over 2 year old business, we've got a very good shot at getting it done or approved if they've got at least a 620 or above credit score. Again, having a mortgage also helps. But again, we work with so many different lenders. We work with literally 14 different lenders outside of us. So there's just not one set of criteria. So I can tell you that in ACG, if you do apply with us, we do a soft credit pull, where a lot of leasing companies have a hard inquiry. We don't. So there's no cost or obligation. Nobody would know the wheres if somebody did apply. And if, let's say, they do have a 590 credit score and we have to say decline, like, nobody's going to know other than me just letting you, the customer, know.
Okay.
So yeah, explain that to us, Chris. What is the difference in a hard pull and a soft pull? I guess just that it's not reported to the credit bureau.
That's right. I mean, it's just, I don't know how we got that, but I requested it for several months, and because I know you can get it. But yeah, it's just simply like if you were to apply with, one of my competitors is CIT. If you were to apply with CIT, there's going to be a hard inquiry on the file, where, again, with ACG, nobody would know. Nobody knows that we pulled your credit, because, again, when lenders see a credit inquiry, and especially one that's fairly recent within the last 30 days, they do want to know, hey, were you approved by that company or were you denied by that company? And if you were denied by that company, it kind of puts a black mark on you, if you will, where our eyes are a little, ooh, somebody else declined them already. What are they seeing that we don't see? So.
Gotcha. Yeah. So let me just back up a minute, and thank you for explaining all that and making it clear. So if somebody's looking to to do an equipment lease, and they're brand new, they don't have a business, but they have good credit, near 700, 680, maybe 700 or higher, and maybe other good things on their credit. They own a house, or they're purchasing a house with their mortgage, and they're up to date on all their payments, then we could probably get them done, right? Is what you were saying?
In general, I mean, again, the rule of thumb is good credit is just a third of the deal when you're a new business. The other third is outside income. And we also, in a questionnaire that, I send out with many startups, not only if, let's say, the application is in Cheryl's name, and Cheryl works an outside job, we also want to know, is Cheryl married, and does the spouse work outside the home? And again, we would be doing that if we were talking to Joe, and, hi, Joe, he's a school teacher, something to that effect. But we also want to know what the wife does. So outside income represents another third of the deal.
Okay.
So there's 66% right there. And then the last part is money's in the bank, money's in your checking account, verifying that you've got. I mean, we'll pull, we have people that we get. I had one just today, where the person's got great credit, outside income, but literally in their checking account, they have $238. And, that's not enough to even cover the first and last payment, so they're on fumes, if you will. So unfortunately, yeah, they've got good credit, but they're hanging on by a thread, no pun intended.
Yeah,
so.
and I've seen that before. It's been rare, but I've seen somebody with really high credit scores get declined because they have no credit history. They don't
That's right.
purchase a house. They've never bought a car. They don't have any credit cards. So their credit score may look great, but as far as their credit history, they just have nothing to show that they can borrow money and pay it back.
That's right. And depending on the situation, we will, if somebody is in that situation where all they have is a car loan and a few credit cards and some student loans, we will reconsider if, let's say, their parents are willing to co-sign for them. Typically somebody who's only got a car loan and a few credit cards would be somebody, in their 20s or early 30s that just hasn't established enough credit. And we would consider adding the parents on there or a family member co-signer. Again, also with verifying their outside income and getting bank statements from them, verifying that they've got monies, to back up the person that they're co-signing.
You just mentioned bank statements. So what other type of things would a client need to have prepared when going through this process?
Really just, again, I send out when I get a startup and it passes the first test of having a mortgage, good credit, again, 680, 700 type credit score or above. Then we send out a questionnaire. It's basically, we want to get a write-up on you. I liken it to if you were sitting at a restaurant with your friend and your friend says, hey, Joe, what got you into this business? Everyone's got a story. And we really found one of the keys to success is hearing your story and hearing some passion in it. We've had some people that have wrote some pretty awful write-ups where they just go, why am I doing it? Because my brother's doing it and he makes a lot of money. That's not necessarily what we want to hear. It could be part of their story, but they just literally just write that, and they'll go outside income. Yeah, I work another job, but they won't give us any details. We're taking a big risk, to doing a new business. And so, it's important for us to get to know, we want to get to know you. You're more than just a credit score. We want to hear your passion story. It doesn't need to be a book, but just more than a sentence.
Chris, one of the reasons that Jeff and I love working with you and with ACG is just what you said. A lot of places you apply, 12 seconds later, you get either accepted or denied. It's
right.
It's all an algorithm, I guess. And as you said, you spend a lot of time making sure that the application is right before it ever gets sent in to anyone.
That's right. That's right. We have just really found that, again, and I've got at my disposal three lenders that we do our equipment zone. And there's many times I'll get 2 declined and 1 approved, or I'll get 2 approved and 1 declined. And of course, obviously, if all 3 of them decline it, then we just know we're sunk or whatever. But again, I literally just, it wasn't one of your deals, but it literally is a customer that was declined by 2 of my startup lenders, and I just got the guy approved. So we just don't have one source, so we try to have as many, and we're constantly looking for more sources at ACG so we can go ahead and get more of your deals done, more of your customers done.
Yeah, Chris, I just love this discussion part right here, where you're taking a personal interest in what they're doing and looking deeper into their business. I've had several clients that have applied for financing that are brand new to the industry, but they have very successful businesses doing in something else. And a great example of that is I've had several clients that are in the car industry. They're either in racing or they're making some parts or whatever. And guess what? T-shirts, they're really big in the car industry.
Mm-hmm.
Very popular. And it's a natural fit for them to also add a T-shirt line to what they're doing. It's a good fit. But, if you don't take the time to understand how that business that they're into transitions into T-shirts, then you might just go for a decline. But when you see that, hey, they're not just a startup, they're a successful business, and this is a natural fit, right?
That's right. And again, and we actually do like if any one of your customers, let's say, owns a trucking company, or a plumbing company, we value the applicant applying under that, because again, yes, that does communicate to us that they have an existing business, so they know how to run a business, and that does help. We still recognize that you're a new business in apparel. So we will need to get we'll still need to get the write-up and the bank statements. But if you have another business that we could put the deal under, that's an existing business that's generating income, again, that we find that reduces our risk.
Yeah, we've certainly had plenty of car businesses, towing companies. I know we did a deal for a company that was that did displays, but they also were doing T-shirts at trade shows for that business as well. So here we are in December, and if anybody's listening to this later on, tell us how 2021 is going. But talk to us about year-end purchases. I just hung up with somebody who said, I need to get this purchase done in 2020.
Sure. There's two ways to write off a lease contract. You can take what is called that the government allows, and please Google Section 179. I'm not an accountant, so you need to seek your own tax advisor. But the IRS allows for a one-time write-off, and they've been doing it for many years, and it's typically around $150,000 to $200,000, where the IRS allows you to write off that full amount in 1 year, or you can take the lease and expense it off. So at this time of year, we do run into people who typically want to take the Section 179, the one-time write-off, and so that's available for them.
Just so I understand this, Chris, because tax law gets a little fuzzy for me, and I will also point out that I am not a tax advisor. Seek out your own tax accountant. But so I could take a one-time tax write-off for the full amount here at the end of the year. But if I don't need that because I have enough tax write-off because I only made $5 all year, right? Mm-hmm. Then I can expense the payments throughout the course of the lease.
Yeah, absolutely. Yep. Those are you have two options. One option, write it off all, or option two is to expense it off.
Perfect. So every payment I make towards a lease is 100% tax write-off.
That's right. That's exactly right. You're able to expense off that entire monthly payment.
And Chris, the customer needs to pay for it in 2020, or they need to take delivery in 2020? How does that work?
It's a very good question, Terry. What I understand is the IRS wants you to take delivery of the equipment in 2020 for it to count. But I'm just telling you, something that was told to me many years ago. There's the spirit of the law and there's the letter of the law. And
I have no idea what you mean by that.
So we have many, and if a customer asks me your question, I will say that to them, just saying you're supposed to have delivery, but the bottom line is, with all the leases, I've been in this industry for 30 years, and I've had many customers since Section 179. I'm talking millions of dollars of customers, that they'll take the write-off this year, and the IRS doesn't seem to be following up to make sure that they actually had possession of the equipment.
Right. The IRS doesn't know that you've turned that invoice in until April anyway. So
that's right.
Surely you have the equipment in hand by then, but you've got that invoice dated December 30th, 2020.
Correct.
So
right.
Well, my last question is this, Chris. What are you going to do with all that Cleveland Indian apparel?
I hope to sell it and make some money from some avid collectors.
For anybody who doesn't know, ACG is located in outside of Cleveland, Ohio, and Chris is a big sports fan. So
yes,
Jeff and I have attended an Indians game with you.
Oh, that's right. That's right.
That was a lot of fun. I still have the hat.
I do too.
Hopefully is worth a lot of money now. Hey, since we're kind of at the end of our questions, we want to open it up to questions from the attendees. If you have any questions about financing for us, please type them into the chat or to the Q&A form there. We'll be happy to answer them. I see we got one from We got a question from Rick Davis. By the way, thanks for attending. He attends all of our webinars. Was natural fit supposed to be a pun? LOL.
Was what? I didn't hear that.
Natural fit supposed to be a pun. We have a question. Now, this is great, and this comes up a lot. People ask me, this is from James McCarthy, interest rate of lease. Now,
That's right.
It's not an interest rate, right? You want to explain that to us?
Absolutely. Best way for me to describe it is if you're leasing rental space from a landlord, your building that you're in, a landlord charges so many dollars per square foot. Okay. And we all know that landlord is charging more per square foot than, so they can go ahead and obviously make a profit every month as well. With leasing equipment, it's the same thing, but it's a per $1,000 factor per month. And, like a common lease factor for a 5-year dollar buyout lease would be 0.022 or $22 per $1,000 per month. So on a 5-year plan, we take, if that's the factor that we're given, and these factors are all based on risk. And, so like this factor 0.022 is for an existing business, with reasonably clean credit. A payment, you take 0.022 or $22 per $1,000 per month times $20,000, and that gives an estimated payment of $440 a month. And that's funny.
Jay just mentioned, if you didn't notice, I love how Chris reached for his calculator.
Yes. And, but for a startup business, that lease factor on $20,000 is going to be 0.02495 or $24.95 per $1,000 per month. So the cost is, roughly $2.95 more per $1,000 per month. Again, just because of the risk involved of a new business, and so a payment for a startup on 20,000 could be as low as, instead of $440 a month, we're looking at around $498 a month. So that $50 a month more is to cover our costs, for the occasional customer who has to go out of business, so, we have to make enough money to be able to cover the losses as well.
So, Chris, Jeff had mentioned about how banks can take weeks and even a month or more. We commonly get some kind of answer from you, either an approval or I need some more information within 24 hours.
Absolutely. Yeah, we, there's many an application, as you see. You don't get the personal information, but for those that are out there, anytime somebody applies, Terry and Jeff are aware that somebody did apply. They don't know any personal information. And as you know, typically we go through those immediately, and, we're getting people. If you don't hear from me, typically that means it's in for a decision. If you hear from me right away, it's unfortunately a decline or a pending notice where we need more information. And that's but also more information could be if an application is submitted under ABC Apparel LLC, and we go to, and they say they've listed down that they've owned the company 5 years, we go to the Secretary of State of wherever they're located and look up ABC. If we can't locate them, we'll need simple things like, hey, just send us a copy of your business license. And it could be that the ABC was A period, B period, C period apparel. And we just didn't, we didn't know that. So that's why we couldn't find any information. But yeah, communication is the key. We will typically get with you with a yes, no, or pending status if we need more information within 24 hours. Absolutely.
Yeah, when people ask me how long does it take, I tell them it really depends on them and how fast they will respond to you with the information that you need.
That's right.
And that you can typically get things done within a couple of days if they're in a hurry, and have it funded.
Yeah. And again, and you also, by the way, if approved, you know, you don't need to go 5 years. You know, we'll give you options of 2 years, 3 years, 4 and 5. I actually just, I didn't even know for this one startup, I just got approved. It's a different industry, but I actually found out that this lender, who, by the way, was the only one that approved this customer, which, by the way, was a logistics, it was a trucking company. Actually, wait a minute, is that? No, no, I apologize. It's not your guys. But anyway, it is somebody, it's a trucking logistics company that is getting some apparel equipment. And anyway, they found out this lender will go 12 months. So, you know, sometimes that could even help a customer out. They got the cash, but they don't want to give it up, but they don't want to pay a whole lot for it. You know, we might be able to get you a 12-month contract as well.
You know, I've had people also say, get a lot of questions like, well, can I pay 5,000 of it in cash and then lease the rest? And my response is always ACG or a lease company will structure it really however you want to.
That's right. That's right.
I do remember one customer saying, they were copying me on communications with you, and this was a couple of years ago. How much do I have to put down to make my monthly payment this? And you came back with a figure for them. And so these things are flexible.
Very much so. In fact, I just literally have one for an embroidery machine. That's what she wants her payment to be, $500-600 a month. And the deal's like $60,000. And so when I'm off of this call, that's one of the things I've got to do is figure out. And which, by the way, we'll also consider 72 months as well. So that's, but yeah, we can tailor make it. You're welcome to put as much money down as you want, if you want to. Another, if I can interject, another common question that every time I approve somebody that comes up, you know, besides interest rate and explaining what we use, et cetera, is can I pay a lease off early? So that is, and there it is, by the way, any early payout penalty.
Timing's everything.
Thank you, James. There's can be nothing in a lease contract regarding paying it off early, because that makes it a loan and not a lease. So it's our discretion, it's our lender's discretion to discount payoffs. You won't be paying any more than what the lease term is. It just would be discounted off of that. Typically, I tell people most contracts, if you do pay it off early, do it after 1 year. That's when the IRS considers a lease to be a lease to go 1 year or longer. You should get anywhere between 3 to 10% off. But if like I do have potential clients that say, oh, I want to pay this thing off in 3 months. And I just will tell them immediately, do not apply with us. You'll be very disappointed. So just if you're wanting a simple interest loan, then contact your bank, for that.
Okay, great. We got a question here about something that we already covered at length. What's the minimum personal credit score needed? And you had mentioned, we'll just cover this again briefly because our time is short, that the personal credit score is just a part of what you need to get approved. It's in what you said, the rule of thumb is a third. Right. That's
right. Credit score is a third. Again, when you're over 2 years in business and you're an apparel company, it's in general, it's about a 620 or above. We've got a shot at getting that done. But again, if you're a new business, preferably we like 700 and above scores. But again, if the other 66% of the deal is good write-up, good income, and good bank statement showing you got liquidity behind you, then again, a 680 for a startup should do it. Again, with having a mortgage. Again, it just depends on how established also that personal credit is. There's just not one set of criteria, which is one of the reasons why you guys have used me over all these years, because if we did just have one set of criteria, imagine the amount of declines you would get, so.
Yeah, a lot of the other finance companies are able to respond with instant decisions because, like we mentioned before, they're probably basing that all just off of a set piece of criteria, an algorithm that is an automatic acceptance or decline. But with you, you're looking at the big picture, the whole picture. That's I know. Right. I had somebody recently that was looking for financing, and And the whole time that I was watching the back and forth, I was just thinking how much I appreciate the hard work that you put into this, because they were looking for a large chunk of money and they couldn't get approved for the whole amount. But you kept going back to the lenders and you kept working on it to see, well, maybe we could do part of it. So instead of it being a decline, you were able to get them an approval for part of it so that they could come up with the remainder. So it wasn't
That's right.
just a straight up, no,
That's
you got
right.
good approval for this amount. You just need to come up with the rest.
That's right. Um, we we're kind of that old school. Again, yeah, the new technology is just trying to give instant responses, but there's nothing wrong with the old statement: if it ain't broke, don't fix it. I saw a question come across regarding, do we look at other sort things, sole proprietorship, in regard to basing credit on. I'm not getting, again, I'm not kidding you at all. Personal credit weighs very heavily in like you could have a 550 credit score, but have the best business credit in the world. Unfortunately, that 550 still hurts. Now, where that good business credit score would have come in through Dun & Bradstreet, and PayNet is another business credit report that is used, is again, if we're dealing with an existing apparel company or sign company, whatever, something to that effect. If they do have a 630, 640 credit score, and if they have strong business credit, it'll help. But again, when most sole proprietorships, it's not going to have much business credit. It's just going, so we're mainly going to be going off of the personal and again, outside income and bank statements. I saw another question. How do I get a hold of you? You can go to Equipment Zone's website. We've got a tab there for financing, or you can call me at 440-579-0404.
Yeah, that's a perfect segue into wrapping up. And, we, I think we've answered all of the questions, and we have a couple of slides here with that lease, or with that, with the link of where to go. You can go to our website. You can also contact me or Terry or Amy, call the office, or you can email us. We'll have a slide for that also. You can do a print screen, save it, take a picture, write it down. Jay's thumbing through the the slides right now, trying to keep up with us.
Well, fantastic. Thanks so much for coming on with us today, Chris. And
it was great.
Very informative.
Thank you for having me.
Yeah, we really appreciate it, Chris. Thank you.